Good evening, TheoTrade. This is Corey Blue Man. You're watching the Theo Nightly video for the 8th of March here in 2022. It's a big day, so let's get right to it. In the market today, the S&P, at least futures, we're down 1%, although that was a little larger than we had in the morning session. Today closed down at the lows. We'll see that right there. Nasdaq was off 1%. These are things that are taking place after the market, but there is the market for today. From the perspective of the low of the S&P, all the way to the high was 112 points. And from the low, or the high in this case, the low, another 100 points. That is a 200-point swing up and down to close down 1% in the session. Nasdaq similar, at that little point total in the Nasdaq, was about 500 points up, just about 500 points down. This is volatility. This is playing within the market that is showing extreme volatility and expected move type logic. So that's where we will start the session. But we are going to move and talk about crude oil, which similarly was very volatile. And the market high to the market low in crude oil, very unusual. That was about $9 or about 7% from the top of the market back to the bottom and then back a little higher. Putting this in context, gold, one thing to watch as well, is that it traded and stayed above the 2,000 per share level. And that's when the bond market, TLT at least, was down in today's session. Let's pick it up on the big picture. This is our daily chart, and we'll actually put the weekly over here on the right. With a lot of room to go to the downside in the event that the downtrend, and yes, the S&P continues to be in a downtrend because it is making lower lows, lower highs, lower lows, lower highs. We'll draw this out. Lower low, lower high, lower low, swing up to a lower high, and then potentially back down to lower lows beneath the 4100 print. And we also have falling moving averages. In the Nasdaq, same logic, except it is playing a little sooner for the downtrend. And that is just about on the cusp of making new lows at that 13,000 level. So as we push into the video, just to pinpoint or draw your attention to key metrics here, we're going to look at the 4100 level as, I say, the edge of a cliff. We've already fallen off a couple of cliffs, but that really will be the edge of another cliff that will take this market lower, potentially 38 or 39 within the course of a few days or weeks. We can see that weekly chart does have room to go lower. Similarly on the Nasdaq, or we can look at the broader technology index, XLK. And we also can look at the Dow mini futures, which again, weekly chart to my right, and the daily chart over to the left. The Russell, that had some resilience and showed some strength in today's session, but nonetheless, the Russell, its key support level, or the key level that if broken sends it back down, would be the 1900 on the index. Promised I would talk about crude, which is getting a superb rally and just continued squeeze to the upside. Now, we heard reports of some hedge funds, or at least some margin calls across the board because of the increased margin. If you are ever curious and whether you trade crude oil or not, you can look at the margin contract and what's required here at the top of your Thinkorswim panel. Go to CL for crude oil, and this is under the futures tab. It would take you $26,000 and $400 to trade one contract of crude oil. And that margin has increased. And if traders are over leveraged, if they're playing short or bullish, either one, and they are playing in over their head, if that margin increases, they will be forced to put up additional capital or sell the position. And that was a large part of the volatility in the afternoon session, when crude oil, despite being trend up in the morning and continued trend up, hit that 130 print and then sharply initially fell at Pacific time, 8 o'clock, and that little waterfall sell-off took place into 9:30. Gold saw the same, or at least a little later sell-off, similarly with its contracts. Again, looking at the futures, gold, it would only take about $7,000 to trade crude. Just for reference, on the S&P, that's 16,000 and others. You can look at the margin requirements there. Beyond that, let's pull back to the daily chart and see outside the equity market, which again is downtrend, crude is uptrend. Gold broke its triangle. Let's pull this on the weekly chart. And it's something we've talked about here in the videos and in some of the reports, and of course the daily sessions, that midpoint is about 1800. A triangle has taken place, and any particular breakout above or beneath would send gold trading in a volatile breakout sustained directional move. And that's occurred. That has occurred in the break above 1850, and then 1880, and then 1900, and then it was off to the races. And gold as a contract played all the way back to the prior high, and that would be a minimum target. Minimum target being achieved. And the last time we saw the continuous contract at this price was into June, July, and just about August of 2020. If you do not trade futures, the ETF that would correspond to gold would be GLD. And of course, there are individual stocks that would play within that additional sector and plays within fundamental stocks. You can take a look at some of those if you wish. But the same ETF movement we see in GLD occurs in gold, the futures contract, and the like. Bonds got a bid recently but have pulled back. Same logic. If you trade the bond market, you can do so within TLT, trade into the futures contracts or the stocks or the option. There are the futures contracts, which is ZN, that is the 10-year Treasury note, and ZB. ZB is the 30-year Treasury note, Treasury bond as well. If you do not trade bonds, it would be helpful to look at the 10-year Treasury index. And we do that here in TheoTrade quite a bit. And what we're looking at now is the yield. So 2.0 does not mean 20, it means 2%. And we saw yield, Treasury yield, quickly rally from about the 1%, that's 1% level, earlier or later, midpoint of 2021. And that shot straight up to 2.0. And that was a very rapid acceleration in the yield. And that has dislocated some particular sectors of the market. But the Treasury yield hit that 2.0 bound and then pulled sharply back from it. And that has led to a little bounce in the bond prices. Outside of equities, we can also look at the dollar. And the dollar, we can look at that DXY here in Thinkorswim, which had its own uptrend continuing from, again, middle of 2021. And the dollar index, which is a basket of currencies against the dollar, and that has peaked into 99. On the weekly chart, the last time we saw this was around the pandemic crash, or at least the shutdown, and when the stock market bottomed, we saw the dollar index spike to new highs. And as the stock market rallied up, we saw the dollar fall. And as the new uncertainty is taken in, inflation, geopolitical data, geopolitical risk, and everything else playing in the market, we have seen a flood or a movement into the US dollar once again. And that is making new 2022 highs, not seen since roughly the 2020 pandemic and the shutdowns in the earlier part of the year. The dollar has re-achieved those levels. So all across the board, volatility is high, VIX is spiking, that is currently into the 36 print, and we see how the historical VIX, that is the pandemic low crash, and other smaller movement in the VIX index. VIX futures, same logic. We are seeing elevated VIX, elevated volatility, and that is pushing option prices across the board higher. Now, which stocks at the end of the video here are making new 52-week highs? A quick note would say 19 of them are pushing higher, and that's ExxonMobil, Chevron, ConocoPhillips, Schlumberger, Newmont, and others you might be familiar with. Dollar Tree, that's a strange one, unless Dollar Tree is making a new high. So DLTR, we'll take a look at that, is a new stock high, or new 52-week high. That is of interest, but so much else going on, we might not want to pay too much attention to that. But which stocks are making new 52-week lows? There's a lot of them, more of them. 77 stocks in the S&P 500 today made new 52-week lows, and I want to highlight a couple of them. Number one, Amazon. Amazon is a big tech name. So we'll pull down to here, just look at Amazon. And in terms of market cap, it is the number one market cap stock, highest market cap stock that just made a fresh new 52-week low, and we see it there and here. There is Amazon on the weekly. It is breaking from the consolidation channel and making new lows. Behind that is Facebook, which is on the sell side, and candidate list on the downtrend. We see Facebook did precipitously fall from 380. Now it trades closer to 190 per share. This is the risk in trading individual stocks, and it could be the fate of the market if additional tech stocks will fall off the cliff. So market prices, even though it seems like they go straight up, that is not always the case. What goes up tends to come down, and sometimes it comes down very hard. Facebook is on the forefront of that selling. Amazon is just slightly behind it in terms of the price action. So that is getting a slide to the downside, but a few others would include Visa. There's Visa pushing a new 52-week low, and JP Morgan. Not to be outdone by the competitor, there is Visa and there is MasterCard. So that is more of a trading range with a key support shelf at about 310 or 312 per share. Failure here does open up the door to 280 and additional drops, and that will be key or true in the individual stocks. And a couple more. We'll look at Nike, NKE, which is really on the sell side at this point, and finish up with Netflix. Netflix is on the downside. These are tech names that were high flyers, and they are, for lack of a better word, getting their wings clipped at the moment. As always, be careful and safe. This is Corey Rosenlund with tonight's Theo video update for March the 8th, 2022.